You're probably using the RSI indicator all wrong. Here's why. Most people, when they use the RSI, they use it as a reversal type of indicator. So they're taught that when the RSI comes up here above 70, it's overbought, and that they should expect a downside move. And when that is below 30, it's oversold, and they should expect an upside move. Now, this can sometimes be useful, right? And as you can see on this chart, we kind of get both of those things here. When it comes up above 70, we get a little bit of sideways action, and then it comes to the downside. When it comes down here below 30, we get a bit of a reversal. It comes up here to the upside. But what you see here is when the RSI gets back up to 70 again, actually a little above 70, around this when it first really breaks, it's at this 203 candle right here. Okay, and then you see that if you had expected a downside reversal and got short here, you would have definitely either gotten stopped out or taken for a ride. So your stop loss would have hit, depending how far out you set your stop. You would have got stopped out, or you would have got taken for a ride with this whole entire move up here to almost 270. Right, we're at 267.54 is the high. So you would have gotten taken for more than a 60-point rally if you got in right here, right when the RSI first went above 70. Okay, so this is the problem with using this indicator as a reversal type of indicator. Now, I'm not saying that you should never look for reversals. There are ways to do it more safely. And the main reason that people look for reversals is because, they want to catch a big move. They want to, make the most money as possible, which makes sense. But the RSI is not the best way to do that, especially with just the 70 and 30. Now, the proper way to use it is as a momentum indicator. So this middle line, 50, right? That's the line that you actually want to pay attention to. So when the RSI, which is this purple line, when the RSI gets below 50, you should start looking for downside momentum, right? And that's what we get here. It first goes below 50, then a slight retest, and then goes back under 50 and keeps, downside momentum. Okay, so that worked out great. Then, when the RSI gets back above 50 here, looks like this candle, okay, gets back above 50 here, then you should look for upward momentum. Both of those worked out really well. Now, again, I understand why most people want to get into a reversal situation, because you want to catch the biggest move, or as much of a big move as possible. So a better way to go about that, if still use it as a RSI momentum type of situation. You still want to use it as momentum, but if you want to get in a little earlier or try to, anticipate a potential reversal better, then you want to use this RSI with its moving average, right? Again, this is not some type of, guaranteed thing. This is just like an added layer of confirmation. And that's really what the markets are all about. It's about stacking the odds in your favor. It's about taking higher probability setups. It's about getting as much confirmation as you can so you can be confident in the trades that you put on. So this would be what you consider another layer of confirmation. This purple line is the RSI. This yellow line is the moving average for the RSI. So if we go with the same momentum strategy, right, we're looking for it to break above 50 for upside momentum. If you wanted to get in a little bit earlier and catch more of a so-called reversal, then you could have used this right when the RSI line was crossing over its moving average. That's where you could have looked for potential reversal from this downside move back to the upside, and that's exactly what happened. this is basically something that should kind of tip you off as like, okay, something might be happening that I need to pay attention to, and this would be that added layer of confirmation, that added layer of probability in your favor. So what you see here is if you had gotten in above the 50, like what I just discussed, and use it strictly as a momentum indicator, and you would have got in here right around 190 and caught this great upside move, which is great. You still made a lot of profit, especially if you traded with size. You're good to go. But you could have got in about 10 points earlier, right? You could have caught an extra 10 points if you got in right around here where the RSI was trading over above its moving average. So you don't obviously want to, sit around all day and just watch the charts, wait for something to happen. So what you can do is you can add an alert on this RSI to see when the RSI line crosses over the moving average. So you would just come in here to alerts. You would select the RSI indicator. I keep it at crossing. You can select any of these, but I prefer crossing because that just basically lets you know if it goes above or below the moving average, for people that are comfortable trading in either direction. Okay. Then you select RSI again, and you see it defaults it to the RSI based moving average, and that's what you want in this box. So if it doesn't default to that, then you just select it. Okay. And then you create the alert, and then you'll get a notification whenever this purple line crosses above or below this yellow line, and you can basically kind of be tipped off to know that, okay, something may be happening that I should pay attention to. Okay. Now again, you can use this in conjunction with other strategies, other indicators, so on and so forth. It shouldn't be the end all be all to your trading, but this can be a powerful way of kind of letting you know that something's happening that you should pay attention to, and this could be an extra layer of confirmation in your trading strategy if you use the RSI. This is a better way to use it. You'll have more success. I've looked at this for numerous tickers, and more often than not you'll get more of these type of moves where you make a lot of money by trading with the momentum than you will just simply trying to play reversals with the RSI. So put this tool in your toolbox, and if this is new to you, you haven't been using the RSI this way before, add it to your trading. Let me know how it works out for you. Hopefully you'll find it useful and it can help make you a lot of money. But as always, be safe out there and protect the downside.